And now to our first conversation. We see Nigeria has a long history of tax reforms, each aimed at boosting government revenue and stimulating economic growth. However, recent policy decisions and proposals like this fiscal reform bill, also the electronic money transfer levy on fintechs, have continue to spark reactions at this point. Well, joining us to unpack all of this, we have Professor Iwa Salami. She's a professor of fintech law and regulation, University of East London, joining me via Zoom. Great to have you in the show.
Thank you for having me.
So I'm sure you've been following. Yesterday we had that town hall meeting on the proposed tax reforms. Why do you think this bill is getting so much reaction in Nigeria?
So, of course, this bill is getting so much reaction because whatever affects how people, spend and how people sort of, have access to the monies that they're going to have to spend in terms of, monies that they've earned, whether as individuals or as small businesses that are quite pervasive, I would say now in Nigeria, as has always been the case. Then those are areas and issues of interest. And this bill particularly comes at a time when the government wants to actually consolidate this tax framework in order to make it more efficient, fairer, more transparent, and for any country that wants to be on a trajectory, if you like, for economic development, the way that they collect taxes and the tax framework is particularly significant. And therefore, the idea around this reform is to actually get that framework going, consolidate the tax framework that exists, but also making it more transparent, fairer, and much more efficient than it currently is. And of course, part of the reaction that we're getting from the northern parts of the countries is as a result of the fact that in terms of the way the revenue is generated from the outcomes of this tax reform would happen, it would happen in such a way that the redistribution of the revenue would pretty much be allocated more to the parts of the country that facilitates, if you like, that are much more facilitating of goods and services, which then therefore means that those parts of the country that aren't as productive in terms of sort of production of goods and services may end up suffering. And so that contention is around that. But of course, the idea really is around making the system fairer, and particularly the way it's been viewed, the existing system has been viewed. The idea has been really that fairness hasn't quite existed, in that certain parts of the country, particularly in the north, have actually been far more beneficial, if you like, in the redistribution of tax revenues.
Right. So in your opinion, do you think this bill will eventually become law? How are you seeing it? What's your outlook?
I think it's so important that for any country that wants to maximize the economic development process and growth, it's so important that we have an efficient tax system. And I think it would have just been a question of time for any government that really wants to effect change to actually take a look at the tax provision of the country and institute the necessary reform. So I think I'm very optimistic that this reform would be passed. I think it's so important that it's obviously managed carefully, that everybody is brought along, understanding the underlying rationale as to why this has to be done. But I think it's so important that this is instituted in order for us, if the country is going to actually carry on that trajectory of growth, it's so important that the tax system works in support of that, the country's economic development agenda, I'd say.
Right. And talking about development, how do you see it impacting, startups and fintechs?
So, well, I presume that the linkages, of course, with the taxing of fintechs and particularly the area that has come up of late is as a result of the I'd say the implementation really of the electronic money electronic money
Transfer levy.
Levy that has been instituted for a few fintech firms and services. And I think, again, I mean, we know that when it comes down to it, the actual amounts we're talking about here is 50, I think 15 naira for every 100,000 transaction. Yeah, that amount is minimal, but minimal relative, I'd say, to obviously the value of the naira now. But I think that with respect to fintech firms, I don't think there's a significant impact on them. There will be a significant impact on them beyond, of course, the operational challenges of actually instituting it, because of course the onus is on them to ensure that that deduction is made and then actually transferred to the Inland Revenue Service. So from that respect, yes, there might be some operational issues, but in terms of the actual costs on them, I think so far that cost of 50 naira per every 100,000, every 10,000 transaction, I think is quite minimal. I think the main question would be, how long are we going to stick with this 50 naira levy? Is this something that has a potential to increase over time, in which case then there might be a knock-on effect on the recipients of those services, and also sort of long-term accessibility actually to finance it from investors of fintech products and services or fintech startups, you know.
And definitely, I've seen a lot of reactions on social media at this point, with some customers already hollering about this 50 naira transfer levy. They're not happy at this point. So talk to me about how this would impact, demand for these fintech services.
So I think the key question here is the tension, if you like, between the agenda to facilitate financial inclusion, as well as the agenda of the country wanting to ensure that they, benefit, if you like, revenue-wise from the growth of the fintech space and financial innovation, because of course we know that there's a lot of growth. But we need to bear in mind that we still have about 60% of the country that are unbanked, that do not have access to finance. And I dare say that this 60%, can be financially included even further through electronic transfer, digital finance type transactions, which is where we see the positiveness, if you like, or the benefits of financial technology, the fintechs, I'd say, and financial innovation. So when we kind of introduce these types of levies, the people that are going to be most impacted are basically the people at the bottom of the pyramid. These are the people that we really want to financially include. And therefore, there's that tension between, yes, we need to get some revenue from this, blossoming and buoyant industry, but at the same time, we need to not forget the rationale really is to facilitate financial inclusion through financial innovation. So I think we need to actually get the balance right, and it would be very important that the government has this, at the back of their minds, if there's a potential to increase that fee of 50%, of 50 pounds, but also bearing in mind that the people that are, as I say, are going to be most affected are the people at the bottom of the pyramid, who that amount, as you said earlier, might be huge for them. And given also the fact that those types of people really engage in quite a number of small transactions. So although I said 50% is, 15 naira is a small amount, those types of people, if they engage regularly in, 10,000 naira transactions, then it means they're going to be paying much more. And that's what we would expect would happen, in which case then the system really would have a negative impact on them, i.e. a negative impact on the people that we really want financially included. And if we place all of this in the context of, the UN SDG goals leading up to 2050, 2030, which is really all around, inclusive growth, economic inclusion, which financial inclusion is a part of. I think the government needs to bear all of that in mind and see how this may impact on those long-term goals, which basically links with our positioning in fulfilling our own obligations to the UN SDG goals.
Right, and talking about investments at this point, how do you think? Because I know most of these investors like to, fund most of these fintechs in Nigeria at this point, seeing that there's a huge gap and that looks quite profitable. How would you say this will shape investor sentiment? For most of these investors that want to fund the fintechs, and maybe an outlook for 2025.
So we know with fintechs, it's all about the opportunities and the markets that the market that's available. And like I said to you, we still have this 60%, particularly in Nigeria, gap that needs to be bridged in terms of 60% still being unbanked. So there's still huge opportunities here. So whilst there's still huge opportunities for which, of course, as you say, investors will still want to support and capitalize on. From that perspective, really, the market is still there. There's still a lot to play for. But I have to say, the potential worry might be, how far do we go? At the minute, it's, as I said, 50 naira per every 10,000 transaction, which seems to be a small amount, but a small amount of this 60% that we want banked, to whom the market is actually targeted at. So in a way, investors may not see this as a big problem, but then the fear and worry about the extent to which the 50 naira can go, the extent to which that there may be potential to increase it, and also maybe necessarily the extent to which that may have an impact on the people we're trying to actually financially include, cater for 60%, would be on their minds. But as I say, there's still that 60% to look after, and there's still a lot to play for. So that's what I'd say about that.
And I know some of these fintechs, they like to ride on that pride there that they can have free transfers. You can have free transfers for as much as you want, maybe 5 times or more, but that would definitely change the dynamic. I'm just imagining if I have just 10,000 naira in my account, I'm trying to make that 10K transfer, but I don't have that 50 naira. That would definitely, be a bummer. But we'll see how it all plays out at the end of the day. Thank you so much, Professor Iwa Salami, Professor of Fintech Law and Regulation, University of East London. Thank you for coming on today.
Thank you for having me.